Welcome friends, my name is Yuri, top trading new offer. In this lesson you will learn what is ATR, average daily move, average true range. Let's go to that lesson. In this lesson, like I mentioned, we will discover what is ATR, how you can use it in your trading and why it's important and why it is essential in my personal trading. I will show you examples where I traded and I will show you how you can calculate it. At this moment, what you should do, here a ball will be a voting, just vote did you use ATR before in your trading or not. For me it's really interesting. And let's go. ATR, it is average true range or average daily move of instrument. What you need to understand, what is average? Average daily move. Why it's so important? Because when you will learn and when you will do all your homework, you will see that in most cases, in 80% cases, price moves 1 ATR or less per day. It's a law, nearly 80%. 1 ATR or less. Like no 0.51. Price move more than 1 ATR to 1.5 ATR per day, only nearly in 10% cases. It's approximately, because sometimes volatility will be bigger, sometimes will be lower. On some instruments there would be Brexit, but numbers will be in general the same. And second, it is better to say 1.5 and more. It will be less than 10% cases, you will see that price will move it. It's important to know it because you will use it, that mathematical expectancy and this number in your strategy. Because when you will know about this fuel, in some cases you will not open entries because you will see that probability is not in your favor. In some cases for you it will be awesome to open some entries. Like we recorded already a simple trading strategy for freshers. You can find the link here, on here. That strategy based on ATR and key levels. Also lesson on key levels will be here in description. What you should do, push like, push subscribe and push notification, because you will get a lot of useful videos and lessons in the future about trading, and all of them for free. That's why push like, because YouTube will see that this lesson is important. Just do it. How you can count ATR? First, you need to take a look on daily candle, and you need to take a look on its candle. ATR, it is a high of this candle minus low. Let's take a look example. Let's it be a stock, and let's it be Apple. Just example for you, Apple. And here high was 100 USD, and here low is 20 USD. And that's low would be 80 USD. That's difference between these numbers is your ATR. How you count it? High 100 minus low 80, and after that you will see that ATR of this candle is 20 USD. For you it is important to know average, because there would be some days when there would be like 22, in some days there would be 18, sometimes there would be 25. You need to understand average number because in most cases, like I mentioned, in 80% cases, price will be near that numbers. And how you will use it in your trading, I will show you. That's why, once more, about this is ATR of 1 day. About average true range, why it's important to have average true range of 10 days or 15 days. Because in that case, you will have one number, and that number will show you current volatility of all instruments. How you count it? Just imagine you count ATR of 10 days. How you can do it? When you count ATR of 2 days or 10 days, it's important for you to have many candles, and how you can do it. Here, like we have these candles, like here, sometimes there would be such candles, sometimes there would be something like this, sometimes there would be many average candles. And it's important to have average to range of 10-15 days. Why? Because that will show you average volatility of that period. And how you do it? First, you take a look of ATR this candle. Just let's it would be 12 USD. Here, let's it would be a little bit bigger, 14. When you count ATR, for you it's important to not include these huge candles, because like I mentioned to you, price will move more than 2 ATR only nearly in 10% cases. That's why it is unnatural. And when you have ATR in 2 times bigger than this one, you don't count it. Like just like this candle, it is 25 USD, and you can see that here 12, 14. Don't use it. Double ATR, don't use it. And also when you have small ATR, like here we have 12, 14, and here we have like 5 USD, we also don't use it. And here like the same, you have 15, and here you have 13. What you do? 12 plus 14 plus 13 plus 15, and after that you calculate it and take a look. I will calculate it for you and will show you real example. You will see when you will add all these numbers, 12 plus 14 plus 13 plus 15, you will have 54. You will have 54, and after that you delete that 54. Few seconds. 54 delete on 4. It will be 13.5 USD per day. That's our average daily move. And you should do it with, for example, at least 10 candles. 10 last candles, you can count ATR. That means here you will have other 10 numbers and you will delete it per 10. And that will be your ATR. Let's summarize why it is so important to use ATR in your trading. First, ATR, it is a fuel. In 80% cases, approximately, price will move 1 ATR or less per day. Second, there would be only 10-15% cases when price will move per day 1.5, double, third ATR. That's why it is unnatural. Fourth, ATR, it is a fuel. When you know that price moves per day average like 20 USD, and you know that it is a fuel. Just imagine you have a car and you have a tank like 40 gallons, like you have 40 gallons of gas or something like that, and you know that you can move only this distance with this fuel. ATR, it is a fuel of instruments. In most cases, when price will move per day 1 ATR, you will be able to open entry in opposite direction. Also, it is not wise to open entry to continue your to continue off trend when price moved more than 80% cases of ATR. In that cases, forget to open entry to continue. Just imagine how it works. Price rolls up 80% from this place to this place, 80% of average daily move. It is not wise to open entry to continue up price, because you will have only 10 or 20% chance that price will move more. You going against mathematical expectation and probabilities. That's why you will hit your stop losses. And most of you, if you will take a look on all your trades, you will see that in most cases the biggest reason of your stop losses was huge horrible money management, and you didn't count ATR and fuel. That's why, friends, what you will do at this moment right now, you should push like, you should share this lesson with your friends, you should subscribe on our YouTube channel and push and turn on notification, because as you see, there's so many lessons free for you, and after that you will start trading incredibly better and help us to share and spread this knowledge around the world. Thank you for your time. Have a safe trading. Bye.